Welcome back. Today we're cracking open the latest quarterly report from a company whose tech is probably right now within arm's reach of you, NXP Semiconductors. We're going to decode their Q3 performance and really see what it tells us about the future of, well, everything.
Okay, let's just start with this number, $1.3 trillion. What in the world could that be? It's not a country's GDP, it's not the value of some tech giant, no, it's a forecast, and it points to an absolutely enormous wave of growth that's coming our way.
And there you have it. That is the projected size of the semiconductor market by 2030. It's set to nearly double from where it is today. So what's fueling this? It really boils down to two things: the explosion of artificial intelligence and the rise of what's called the intelligent edge. We're going to break down exactly what that means.
So here's how we're going to break it all down. We'll start with that huge tech wave. Then we'll zoom right in on NXP's Q3 report card. We're going to look inside their biggest growth engines, check out their strategic plays for the future, and finally, see what they're telling us about the road ahead. All right, first things first, let's get the big picture. The growth in this industry isn't just about building faster chips for giant data centers anymore. It's about a massive shift in where computing actually happens, moving from that centralized cloud out to what we call the intelligent edge. So what is the intelligent edge? What does that even mean? Simply put, it's about making our everyday devices smarter. It's about giving them the ability to sense the world around them, think about that data, connect to networks, and then act on it, all there on the device itself, without having to phone home to a giant server farm for every little decision.
And listen, this is not science fiction. It is all around us, right now. We're talking about smart cars that are basically powerful computers on wheels. We're talking about smart factories that can optimize themselves, smart buildings that manage their own energy, and, of course, all the smart connected devices in our homes and in our pockets. This is the world that NXP lives and breathes in. Okay, with that in mind, let's dive into the results for this quarter and see how NXP is doing in this new landscape. It's time for the report card. So, what's the view from the top? Well, NXP's incoming CEO, Rafael Sotomayor, laid it out pretty clearly. They beat their own targets, and the real key phrase here is sequential improvement. That means things are picking up steam from last quarter, which sets a really positive tone.
And here's another number that investors watch like a hawk: $3.11. That's their non-GAAP earnings per share. Now, non-GAAP basically just means it's an adjusted version of their profit. They feel it gives a clearer picture of how the core business is really doing. And at over $3 a share, that is a strong, strong number.
Okay, so this table tells a really interesting story if you just look across the columns. Yeah, total revenue is a little bit down compared to this time last year. But look at the jump from the previous quarter, from Q2. Revenue is up a solid 8%, and their profitability margins are getting better. This really suggests the company is gaining some serious momentum.
So where is all that momentum coming from? Let's pop the hood and take a look at the engines that are really driving NXP's business forward. Wow, okay, this chart says it all, doesn't it? It shows NXP's big bet. A massive 58% of their revenue comes from just one place: automotive. Industrial and IoT, which covers things like those smart factories we talked about, comes in a distant second. It is crystal clear. As the auto industry goes, so goes NXP.
And this scale here is just staggering. Over $1.8 billion in a single quarter just from selling chips that go into cars. This ties right back to that intelligent edge trend. Cars are getting absolutely packed with electronics, and NXP is one of the key players making that transformation happen. And the company is betting that this engine is only going to get bigger and more powerful. They're projecting their automotive revenue to grow from about $7.2 billion in 2024 to an estimated $9.5 billion by 2027. So this isn't just a trend for them, it is the absolute core of their growth strategy. But hey, a healthy company isn't just about one good quarter, right? It's about the strategic moves they make to win in the long run. So let's see how NXP is actively shaping its business for that automotive and IoT future.
This slide shows a classic corporate strategy in action. It's all about focus. In July, they agreed to sell off a business that wasn't really core to their main mission. Then, in October, they went out and bought a company, Avivalinks, that specializes in the exact kind of in-car connectivity that makes their automotive business stronger. It's all about doubling down on what you do best.
All right, so with a solid quarter in the books and some smart strategic moves behind them, what does the road ahead actually look like? Let's take a peek at the company's own forecasts.
Now, this slide shows a really crucial shift in their thinking. If you look at their 2024 model on the right, yeah, they've slightly lowered their revenue growth target, but look at the 2 rows below that. Their targets for both gross margin and operating margin are way higher. The message is loud and clear. They are laser-focused on profitable growth, not just growth at any cost.
And for the very next quarter, the outlook is what I'd call cautiously optimistic. They're guiding for more growth with continued strong profitability. And that line from the CEO about seeing signs of a cyclical recovery, that is a huge signal. It suggests they believe the whole semiconductor market might finally be starting to turn a corner.
And that brings us to our final question for today. NXP has clearly, and I mean clearly, placed its big bet on the intelligent edge, with a huge focus on cars. As everything around us becomes a computer, our cars, our factories, you name it, the big question is this: will NXP's focused, high-margin strategy be enough to keep them in the driver's seat of this massive $1.3 trillion market? That's what we'll all be watching.